There's a Singapore company most investors have never heard of that owns 25-year government contracts to sell electricity in Indonesia, and it also happens to be the exclusive Asia distributor for Switzerland's top precision motor maker. Its stock went from 34 cents to 73 cents in the past year. That's up over 100%. Welcome back to JC Project Freedom. Today we're deep diving ISDN Holdings, SGX ticker I07. By the end of this video, you'll know exactly how ISDN makes money, why 2026 is a make-or-break year for this stock, and whether there's still a margin of safety left at today's price. Let's go. ISDN makes money four ways. First, and this is about 70% of the industrial business, they're the exclusive Asia distributor for Maxon, Switzerland's top precision motor maker. Servo motors, gearboxes, drives, sold and serviced across China and Southeast Asia. Second, they build smart factory systems, warehouse automation, SCADA, MES software. Third, they manufacture their own precision components, motors, gearboxes, laser processing in China and Taiwan. And fourth, the part one find most interesting, they own and operate mini-hydropower plants in Indonesia under 25-year government contracts, collecting tariff income like a utility. Founded in 1987, 75-plus locations, over 10,000 industrial customers. This isn't a hype stock. It's a 39-year-old engineering business that found a second growth engine in renewable energy. Revenue peaked in FY 2021 at 440 million Singapore dollars, then fell for 2 years as China's manufacturing sector went through a brutal down cycle. FY 2024 and FY 2025 marked a recovery, up 8.9%, then 18.2%, putting revenue right back at the FY 2021 peak. China, still 64% of revenue, grew 6.9% on a constant currency basis, outpacing GDP growth, thanks to demographic pressure forcing automation adoption. Southeast Asia, Malaysia, Vietnam, Thailand grew 18.3%, riding the China Plus One supply chain shift. This isn't a cyclical bounce. It's a structural automation upgrade cycle running across two regions at once. Here's the catalyst that could re-rate this stock. ISDN has 3 operating mini-hydropower plants in Indonesia, each under a 25-year build-operate-transfer contract with PTPLN, Indonesia's state utility. These plants run above 90% gross margin, essentially government-backed annuity income. 2 more plants, Lau Biang 2 and 3, are targeted to come online in 2026. Once commissioned, total capacity jumps 81% to 44.6 megawatts, adding roughly 12 to 15 million Singapore dollars a year of high-quality, recurring cash flow. This is a discrete, datable event, not a hope, a construction milestone the market can watch happen in real time. 2 moats worth knowing. The Maxon distribution agreement, renewed through 2027, gives ISDN exclusive selling rights across 9 countries. ISDN also co-owns the Maxon manufacturing joint ventures in China. Maxon can't easily walk away from a 30-year relationship and a 50% JV stake. The hydropower concessions are effectively government-granted monopolies on specific river sites for 25 years. No competitor can displace ISDN from Lau Biang or Ngozi during that window. Neither moat is Apple-wide, but both are durable and both are hard to replicate in this region. FY 2025, revenue up 18.2% to 440 million Singapore dollars. Core profit up 25.9% to 9.7 million Singapore dollars. Reported profit actually fell 21%, but that's entirely a non-cash currency revaluation on long-dated hydro receivables, not a real business problem. Management strips this out and focuses on core PATMI, and so should you. Balance sheet is clean, net debt to equity of just 4%. And the stock, from a 34-cent trough in mid-2025 to about 73 cents today. Analyst consensus target sits at 96 cents. I ran an owner earnings DCF and cross-checked against EV/EBIT multiples versus SGX industrial peers. Blended fair value, 84 to 88 Singapore cents. Current price, 73 cents. That a margin of safety of roughly 15 to 17%. Solid, but below my 30% full position threshold. Reverse engineering the current price tells me the market is only pricing an 8 to 10% earnings growth, when the hydropower step change alone supports 15 to 25% growth through 2028. That gap is the opportunity. 5 risks I'm watching. 1. Hydropower commissioning slips past 2026, pushing the earnings catalyst to 2027. 2. Maxon dependency. Roughly a third of group revenue rides on one distribution agreement. 3. China receivables. 26% are over 90 days. 4. Currency swings will keep distorting reported, not core profit. 5. CEO succession. Teo Sher-Kun has led this company for 35 years with no public succession plan. None of these break the thesis. All of them are worth monitoring every quarter. Under the JC Fund framework, ISDN is pass, monitor. I'd initiate a half position at current levels. The margin of safety is real, but not yet at my full conviction threshold. I'd add to a full position on any pullback to 60 to 65 cents. That's a 24 to 30% margin of safety, my preferred entry point. Watch 2 things this year: hydropower commissioning progress, and the FI 2026 interim results in August. That's ISDN Holdings, a 39-year-old distribution business with a hidden utility growing inside it. If this helped you think differently about small-cap industrials, drop a like and subscribe. I'm covering another SGX name next week. See you in the next video.